Hello, this is Jordan. This video is being recorded on the late afternoon of Friday, December 16th, 2022. Thank you so much for joining me today. And in this brief video, I'm going to provide a wrap-up of the gold and silver market this week. So starting off here, we have the daily charts of gold and silver. And in my last video, my last weekly, not a recap, but a preview, I think I mentioned I expected lower prices this week, but it was possible that we could see gold push up to more significant resistance around 1840 and silver push up higher to more significant resistance just above $24. And not to take a victory lap, but that's what happened. Even though on the week precious metals closed lower, there was a point where at least gold and silver traded higher. And so we can see here that, gold and silver earlier in the week, they traded up to these resistance levels. And again, for gold, there was resistance in the low 1800s. You had the 200-day, which you can see there, the 400-day, which is nearly identical right now to the 200-day. But nevertheless, if gold was able to push beyond that, it would probably stop around 1835, 1840. You go back to the end of 2021 and early 2022. I remember saying that 1835 was really the key level then. And again, the 50% retracement of the cyclical bear market in gold, I believe that comes into play right around 1840. So a lot of resistance there. All these reasons to think that gold isn't going to go higher from that level. Same thing with silver. Silver has been leading, but it looks to me, if you look at the bottom there, that's the gold-silver ratio. It's had a big decline, but if you look at the last couple days, you can see there is a tick higher there, and that makes sense. If we're looking at the unfolding macro situation, which over the coming weeks and months figures to be recessionary, lower bond yields, the Fed's done hiking. The Fed has to, cut rates if the stock market really falls and if economic data really starts to get worse. That's the kind of environment where silver is going to underperform gold. So I could be wrong about that, but I'd be really surprised if this outperformance of silver will continue to last. I don't think it will. But nevertheless, in the grand scheme of things, I think we've seen the major low in gold and silver, but and it has been a good sign that silver bottomed first and silver has been leading. But again, maybe there's just going to be a pause in that relationship over the next couple of quarters, given the unfolding macro. So that's something to keep an eye on. Yes, I'd be surprised if we were going to see more upside here in the very short term. Even though on Friday we did see a divergence, we saw a recovery in precious metals while the stock market traded lower. But nevertheless, if we're looking at the week as a whole, you had the S&P down 2%, silver was down 1.5%, the stocks were down 1.1.5%, in that range. Gold was only down 0.6%, and that's what we want to see. We want to see if the stock market continues lower, continues to correct, and we're right about the macro. We want to see, and I think we will see, gold really outperform and that gold S&P ratio move much higher. Stay tuned. I'll definitely be doing a video on that in the days and weeks ahead. As for silver, as for gold, I didn't really mark this potential support levels there. I'm more keen on silver. Silver has the 200-day there at 21, and below that, you can see there's support at $20. So I would not be surprised to see silver come down and test $20. And from this point, I don't know, what is that? A little less than 15%. If gold were to come back, 5-6% or so, that's potentially $100, which could bring it down to 1,700. 1675, 1685. There is a lot of support there. So that's something to keep in mind over the weeks ahead, especially if we see a real risk-off market where even gold gets hit. So turning to the stocks, Here we can see GDXJ in the middle, SILJ, which actually SILJ trades a lot more volume than SIL, or trades more money, I should say. And so you could basically see, if you focus on the right side of the chart in the last couple months, we can see, particularly with the top two, there were these strong resistance levels. You had clear resistance as far as the horizontal lines. You also had the 200-day moving averages coming into play. And so now take a look at the thumbnails to the right. And so you can see how these markets have interacted with the 200-day moving average. And look, Friday was a good day. You can see white candles there, very strong white candles in GDXJ and SILJ, which I'll get to in a moment. But aside from those white candles, if you look at what's happened in the last couple of weeks, there's an awful lot of black candles there. That's a sign of distribution. So there's a lot of distribution going on as these markets test resistance. And so, again, we've had a good rally in this market. I think the major bottom is in. But that aside, if the stock market's going to continue lower, it's going to pull down the miners. I mean, it already has a little bit, and I think that will continue. At some point, they're going to diverge. I'll get into that in another video. They will diverge at some point. But, if we're just focusing on the next couple weeks, the next month, I think the path of least resistance for the miners is going to be lower. Now, if you look at the stronger white candles, the last candle in GDXJ and SILJ, there's a couple of things there. I think GDXJ had some rebalancing, so various individual juniors made some really strong moves today. And, in addition to that, tax loss selling is a big factor with juniors. Obviously, I mean, it's a big factor in any market that's performed really poorly. And you can just look at, what's happened to GDXJ and SILJ, since the second quarter. Yes, these markets have recovered, but nevertheless, there's still some big declines there. And we're coming up towards the end of tax loss selling. And, it's not just retail selling, but there's also here and there in various individual juniors, there's, big funds that have been selling. And so, as we get to the end of the tax loss selling pressure, then you start to see like the boomerang rebound effect where all that selling is done. And naturally, these things can start rallying at the middle, the end of December, and into January. So I think that speaks to why we have seen and potentially will continue to see some violent moves in individual juniors. They get really oversold. A big fund dumps its position in December. Retail keeps selling. But then as that selling pressure wanes considerably, then those securities have potential, especially if just a little bit of buying comes in, they can rally even 20, 30, or 40%. So there is a dichotomy where some of those individual juniors can rebound, while the sector itself, in a larger sense, might correct with the stock market, potentially here as 2023 starts. So that's it for this week. It should be a really exciting year for precious metals. Check out my editorial at TheDailyGold.com. And I continue to think the short-term bias here is to the downside. But, there are various individual juniors that are making some really strong moves here that are a little surprising. But, that aside, I think that if you look at the macro and how things are setting up, the weakness that we have seen, and I think we're going to continue to see over the coming weeks, that's going to be, probably the last best chance to accumulate this market and buy this market, really, because when you get to the point when the stock market, when the S&P, if that's falling below 3,800, getting near 3,500, the market knows that the Fed is done, and then the market is sniffing out rate cuts. That's when you're going to see precious metals really detach, decouple, and you see the real beginnings of a real bull market. And so you want to get positioned before those things happen. So thank you very much for tuning into this video. Hope you found it valuable. Leave me your comments, and talk to you guys again in the next video. Hope you had a great week.